right, here we are, episode number 23. Welcome, everyone. As always, I'm joined by my partner here, Jake Sadler, who's out in Asheville, North Carolina, and we are here today to continue the topic of talking about taxes. And Jake is going to flip the script here a little bit and ask me some questions about tax returns, as I am a CPA and I've been doing this for a long time. I forgot a lot of stuff. So let's see what happens, Jake. What do you think?
I think you could safely probably say you've forgotten more about taxes in your lifetime than most people will ever learn. And I'm curious, when did you start preparing taxes? Like, how long have you been in the weeds on tax returns?
Oh my God. I guess I would say I started getting in the weeds of tax returns in 1995. So when I got out of, this might be giving my age away a little bit, but I got out of college, I sort of fiddled around with some different jobs and trying to go different paths, and ended up using my degree in accounting and getting my CPA, and started with a small accounting firm in 1995, where the interesting part was in a small accounting firm, you prepare every type of return out there. I mean, you can't really specialize in one particular area when you're at a small firm, and small firms have a lot of clients, a lot of different clients. So you learn a lot, especially when you're a young CPA just starting out.
Yeah. So like, what kinds of returns, like individual, companies, trust, like, kind of like all these different types of tax returns?
I've done it all. Yeah. Individual tax returns, business tax returns, S corporations, LLCs, trust tax returns, some more than others. Most of my career has been individual tax returns, because I started to focus early on with the investment advisory services and financial planning. And I tell the story all the time where I just thought it was a really great fit to connect the two, taxes and investments and planning. I thought it was really important. So that's really where my focus has been. But, there's always a client that'll come around that, has an S corp or a small business. But yeah, no, I used to do audits and financial reviews and nonprofits, and so I've done a lot of different stuff over my career.
I think it's really interesting, like, as you're describing it, just because on the surface, if we're talking about taxes, I think the most relatable thing, for the vast majority of people, it's just going to be the individual income tax return. And I think it's probably what we're going to end up talking the most about today. But there's a lot other types of entities that need to file returns, and they all kind of have their own rules and all that good stuff.
Oh yeah,
to go along.
Oh yeah, absolutely. And it's never changed. It's always changing. So yeah, it's a lot.
How many tax returns do you think you've prepared over the years? Are we talking tens of thousands or hundreds of thousands? What are we talking about?
Oh, you might have to do the math for me. I mean, you could get into a point where you're in from April to April 15th. You could probably do 10 tax returns a day. So, that's 150 maybe. I mean, that's a lot. That might be pushing, but literally back in the day, you would work 7 days a week, 12 hours a day, and just grind it out. The last couple of years have been different, but that's the way it was. And so, if I did 200 or 300 tax returns a year for 20 years, what's that? 6,000 tax returns.
I'm in the thousands. I think we could just safely say in the thousands. And let's dive into talking about this year in front of us, because most people, if they're filing their own returns, they've filed maybe a couple dozen at best, maybe a few dozen, like just over the course of their lifetime if they're doing it themselves. And so let's just kind of dive into kind of what we have in front of us for the year. It's February now, so we're kind of dating our episode here. What are the deadlines that we're looking at here coming up for the year?
Yeah, so the deadlines for individual income tax return filings this year is April 18th. Typically, it's on April 15th, but there's holiday or weekend involved. It gets pushed to the following Monday. So April 18th this year of 2023 is when your individual income tax return.
Very good. Yeah. So I know we've got a holiday. It's Emancipation Day, which is April 17th. So we're kicking it to maybe a Tuesday for this year, April 18. I looked it up before our episode. So when kind of like, has it always been April 15th? So since 1955, it's been April 15th.
You answered your own question.
Income, individual income. Oh, I mean, look, I could quiz you, but yeah, they're kind of obscure. March 1st was actually the original tax filing
Oh.
date, and then it was moved to March 15th in 1918, and then April 15th.
This, it's interesting. There's so much work that gets done in a short period of time. I've been thinking about this, when COVID hit and the deadlines got extended. I don't know if that was a good thing or a bad thing, because things drag out, and sometimes people drag their feet without a deadline. And so I don't know if it really helped with getting things done. It just made the stress maybe longer period of time. It's just hard to say whether pushing it out or making it longer would be a good thing. So.
Yeah, it's kind of nice. I mean, like you know the deadline. You've got to do it by the deadline. What happens if you miss the deadline? Like, what's the deal if you can't make it by April 15th? What do you do?
Yeah, so that's a good question. Most people think like, hey, if I don't get my taxes done, it's a huge, major problem. It's not necessarily a major problem because you can file a Form 4868, which is an extension which grants you 6 months to actually file your returns. So that makes it the due date April 15th, I'm sorry,
Okay.
October 18th this year would be the 6 months from the filing date. But the key factor to that is, regardless of whether you file an extension or by return, you need to have your taxes paid in by April 15th.
Ah, yeah, there it is.
That is a key point. So you still need to sort of look at the information you have. You need to make sure that you've paid in enough taxes to cover your tax bill. Otherwise, you're accumulating interest and penalties throughout the year while you're waiting to file that tax return.
What if you can't like dial in that number as accurately as possible? Like, what if you're missing? So like you still have to pay, but you're filing for an extension, but you maybe don't have the right number that you owe. What do you do?
Yeah, so that actually happens a lot. And the reason it happens is because a lot of people will own like interests in a business, and those businesses, we can get in those due dates in a second, but they can also be extended. So, and that happens a lot. And that information, a lot of times it's called a pass-through entity, and those businesses pass through the income to the individuals. And if they're not filed on time, the individual can't file on time. So it happens quite often with people waiting for information. So what we do is we definitely want to make a really good estimate to the amount of taxes that are owed and make those payments in based on that estimate, so we can avoid the interest and the penalties going forward. So that's what I would do. I would best guess information in terms of what the business income might look like or what information we're missing, and prepare the estimate prepare the extension with an estimate.
So like sometimes in that situation, you might be getting a refund when you actually file your return on the extension. If you kind of overpaid, had to make an estimate, and you didn't want to undershoot it, you wanted to overshoot it.
Yeah, you get a refund. You can apply it to next year, and it really doesn't happen that you really shouldn't have to worry about it too much if you're having withholdings taken out of your pay, and you typically get a refund on an annual basis. If you don't make a payment with your tax return, you should be okay. I will point out though that there's what's called a failure to file penalty also, which is actually more than the failure to pay penalty. So if you don't file an extension and you file late, you could actually you'll end up paying 5% of the balance due per month. So it can get pretty steep pretty quick.
Yeah, and I know, I mean, like with all these penalties and interest, it's a lot to keep up with there. And even with the deadlines, you mentioned the corporate deadlines. Did you want to kind of touch on that? Are you working with a different deadline there other than kind of April 15th and in the extensions? Does it work the same way, or what are we looking at?
Yeah, so these pass-through entities, which are LLCs that file as partnerships or states and trusts or S corporations, those entities that need to prepare a tax return and flow the information out to the taxpayer, the individual, those are due March 15th of each year. Okay. And so that way it gives the taxpayer time to to prepare their return and file their taxes. C corporations, which are entities in themselves and pay their own taxes, follow the same deadlines as individuals. So they have till April 18th of this year, just because they're not flowing through information. That used to not be the case. It used to be reversed, but that finally got changed a few years ago.
Yeah. Now, if a company is on a different, if they're on their own fiscal year, are they working with a different kind of deadline there, or are they kind of subject to? I'm just curious now, or do they kind of have the same deadline?
Yeah, no. If you are on a fiscal year, you follow the same sort of guidelines of it. So it goes by month technically. So a pass-through entity, it's the 15th day of the third month after your year end. So that's the real sort of description of it. So if you had a fiscal year ending June 30th, you would pay you would be due 2.5 months after June 30th. Does that make sense? And then if you filed for an extension,
Yeah, that makes sense.
if you filed for extension, then it would be 6 months. So yeah.
I like this. I like this conversation because it's really kind of brings to light, maybe it's just me from my standpoint, we think about, taxes, you got this deadline. It's just this magical date that you file your taxes on and everything happens. And it's just the way it's always been. No, these are like conscious decisions that have been made, and there's specific language around how things are done, and there's intent and thought around how we're doing everything. So I think it's really interesting, even though we're just at this point, we haven't gotten too far into a lot of questions. So we're still talking about deadlines and things. But I think, kind of moving ahead to kind of things that are more relevant, as we're gearing up for these deadlines and to prepare for filing, what do we need to have in front of us? What do we need to have to file our taxes? What kind of forms do we need? Where do you go to file your taxes? All that sort of thing. Let's start with kind of what do you want to have in front of you to be prepared?
Yeah, that's a really good question. And it depends on a lot of different things. But the primary documents will be your W-2s and your 1099s. And those are sent to you either by your employer or an investment company, or so it's your investment companies. Like if you did work for a business and they were going to pay you as a subcontractor, then you get a 1099. So there's lots of different places you can get the W-2s and 1099s from.
So we're really kind of focused on, as we're preparing, we need to have all of the documentation that shows where our income came from for the year. I think this makes sense. Again, good conversation to have. What are we paying tax on? We're paying tax on income. So this is income tax. So I looked it up. The IRS has 22 different categories for income. And of course, there's forms for all these sorts of things. The W-2, that's going to be the most common one, right? I mean, that's what we get from our employers. That has taxes withheld from it. That's been around for a long time, since 1943. And then you got all these other types of documents. A lot of times they're 1099 or 1099 something.
Yep.
And they show types of income from all these kind of other different sources. And do those generally have tax withheld, or what do you do if you have a 1099?
Yeah, so that's a good one. The big one I forgot is the 1099-R, which is for retirement distributions. If you get money from an IRA or a pension or something like that. So that's a big one. The ones that primarily have the taxes withheld are the W-2s. The rest of the ones, you are going to most likely need to specifically reach out to whoever's providing the 1099 and ask them to withhold taxes. For example, with clients with these retirement distributions, we can actually go to our custodian and say, hey, we want to take money out of this account provided to our investor. We want to hold X percentage in federal tax and X percentage in state tax. And then some of them, like a pension, I see a lot of pensions, there will be just federal withholding and no state tax withholding. You can have it withheld from the Social Security. I believe you can have, I think it's just federal income tax withheld from Social Security, and you have to specifically let them know and be proactive about it.
Yeah. That's a really interesting, kind of diving into, withholding versus maybe making payments in another way. And especially if you're retired, you kind of, for a lot of folks, you're shifting at that point of retirement where you've gone from a working career, and your tax situation has really been, you got W-2s coming in, taxes have been withheld. And a lot of times you're getting a refund if that's the case. So you've had taxes withheld along the way, throughout the year. And then when you go to pay your tax, oh, you had more, withheld from your paycheck than you actually owed. So you get some back. And then you get to retirement and all of a sudden you owe money.
Yeah.
Do you how do you usually navigate that for folks that are entering into retirement? Do you try to, kind of see where they are in their preference for a refund, or if they have a real problem with paying taxes along the way themselves, and set up withholdings in some way? Or what do you do with retired clients and withholding versus?
It can be an annual experience trying to figure out what the income is going to be, because we touched on the W-2 in terms of that, in the 1099-Rs and Social Security, where you can get taxes withheld, where when you're retired, a lot of your income comes from investments. And so you'll receive a 1099, and investment companies, if it's not retirement, they're not going to withhold any taxes from your money. They just provide you this statement at the end of the year that says, hey, we paid you X amount in interest, we paid you X amount in dividends, and you had some capital gain distributions, and you sold these securities. And so depending on where you hold your investments and how much income those produce, it can change significantly on an annual basis. And so one of those cases is, let's say you need some money to purchase something in 1 year after you retire, and you liquidate an asset, and there's a large capital gain on it. That's going to throw you into a different tax category. So you got to be conscious each year of where your income's coming from and what type of taxes applied to it.
Mm-hmm. So it can be dynamic then in retirement. It's not necessarily kind of shifting from, working, you have taxes withheld, you're getting refunds, to all of a sudden, you just have to make one change. It could be a change from year to year.
Yeah, exactly. And most likely that is the case. Now, we fall into this, I'll call it a trap, but, when we're preparing a tax return, you can sort of get safe with taxes. And what I mean by safe is you can avoid paying interest and penalties on amounts due as long as you meet a couple different requirements. There's essentially two ways to do that. You can pay in to the IRS or your state 90% of your current year tax liability. So let's say your total taxes and all your income is going to be $10,000. As long as you pay in you've paid in 90%, you should be good. You're not going to incur any late penalties or interest up till April 15th. The other way is you pay in 110% of last year's income tax liability. So in, let's say in 2021, my tax liability, my total tax, I got to be careful how I say those words, was, let's say it was $15,000. If I pay 110% of that in throughout the year, then I'm not going to have any interest and penalties if I owe another $30,000 by April 15th. So I can have this big tax amount that I owe and have no interest and penalties on it, as long as I met that requirement of paying it in. And that changes, that's...
When do you have to pay?
What's that?
When do you have to pay? Is that just by the April 15th deadline?
Yes.
Or are those in those quarterly installments that you sometimes hear about, the quarterly estimated payments?
Yeah, so that's a really good question. So it depends. If you're making estimated payments, then you would have to use those payments to meet those requirements of paying your tax in. And then the amount owed would be paid in at April 15th. So let's say in 2021, I had $10,000 of tax. So I would have to pay in $11,000 this year. I can do that through my quarterly estimated tax payments. And then if I owed a big chunk, I could pay that in by April 15th without having a big interest and penalties. So you just have to meet those requirements of paying the tax, but you have to make those payments throughout the year.
On a quarterly basis.
Or if it's withheld from your paycheck, or from a 1099-R or something like that. If it's withheld, then it's considered paid evenly throughout the year.
Gotcha. Okay. All right. That, I mean, that really helps a lot in understanding, okay, you owe this tax, and, it's kind of, again, like if you're in your working years and your W-2 and you're having taxes withheld from each paycheck, I mean, your kind of experience with taxes a lot of times is that refund. I mean, you have 108 million tax filers got a refund in 2021, like 160 million tax returns filed. So like the vast majority of tax filers are getting that refund. They're kind of in that situation. And so to shift to anything other than that, kind of creates its own set of complexity. And I think it requires a deeper level of understanding by the taxpayer, to kind of like, what's the deal? Like, how do I get the taxes to where they need to go along the way, without incurring any sort of penalty?
Yeah.
So,
and we're in it all the time.
so like,
I was just going to say, like, this is, I mean, we're dealing with this right now. Like, we're in it all the time. So people's income changes and you're not getting that refund. And the funny thing is you may be paying less tax, but not getting that refund is upsetting. So it's just,
it's so, like, I think this is honestly like, if we take anything from this conversation, there's a psychology around paying taxes. And like, there's this, you could be paying less total in taxes than you were, say, if you're retired now, and then you were in your working years. But if you have to pay it and it feels like it's coming out of your pocket and not your paycheck, it feels different. It does not feel as good.
I have that conversation all the time, Jake.
And that can definitely make it harder.
Yeah, I have that conversation all the time. It's like, hey, you owe $3,000 in taxes. Your total tax is $3,000. You're like, whoa, that's so much tax. What's going on? Meanwhile, the year before, when they had other income sources, it might have been $20,000. They get a $2,000 refund, and they don't think they're paying any tax. So it's very psychology driven.
Yeah, and I was meeting with someone just earlier this week. They've just recently retired, and we were just kind of going over all this sort of thing. And he was like, okay, well, we got a good news, bad news situation. You're probably gonna be paying less in taxes, but you're probably not gonna be getting any more refunds, from this point forward. So, but you're still paying less, so that's a good thing. So like, I think just like kind of mechanically, I wanted to kind of hear from you on just kind of where do you go to file your taxes? If you're doing it yourself, should you be using a software, or can you do it paper and pencil? And if you're going to work with someone, does it kind of matter who you're working with?
Yeah, so those are good questions. I would not recommend doing your taxes paper and pencil. I would not. There's so many calculations and so much information that needs to go on there. The likelihood of you making a mistake is high. That actually, I had somebody come in the last 2 years that had prepared their taxes by hand, and it was, let's just say, very off. They paid way more than they should have just because of some simple reasons. So that is you shouldn't do it by hand. And there's lots of different tax filing softwares out there, TurboTax, and they've made it really, really easy. It's a question and answer type format, and you can, if you have a simple tax return, if you have a W-2 and maybe some interest and dividends, then that do it yourself. That is very feasible. I think the IRS and the state have some ways that you can actually file free online, but it's pretty economical to do it yourself.
Mm-hmm.
Whereas if you're with a CPA or somebody who's preparing the taxes, I mean, there's just a minimum cost that we have to incur to pay those taxes. It's hard to actually prepare a simple tax return for, under $400 or $500, just because, there's so much going on. You review it and you're looking for advice, but you could use,
I think though, like simple, I think on the surface we might say simple, but, for a lot of folks, filing a tax return is complicated. And, for someone has the experience, you've filed thousands of returns over the years, like you can kind of categorize a kind of more simple return versus a much more complicated return. But I think just to that point around the kind of psychology of all this, filing taxes can be daunting for a lot of people. You only do it once a year. You got to forget everything you learned last year when you did it. So most likely. So I think for a lot of folks, even their kind of more simple tax situation can be daunting and challenging.
Yeah. It's like if I have a hole in my wall, a contractor might say, just put some drywall in there and patch it up and repaint it. But to me, that's like, whoa, I can't do that. What are you kidding me? So I'm willing to pay for somebody to do something that's relatively simple to them, because they know how to do it. They do it all the time. and so forth. It's just hard to find somebody to fix drywall for you. But
I mean, it's like you just got a hole in your wall, right?
yeah.
Yeah. So,
And the other thing I'll point out
but yeah, so you have this.
is, I
Yeah.
don't mean we're cutting each other off a little bit today, but there might be some things that you just don't know, um, that you just might
Yeah.
miss when you're doing that, like opportunities to contribute to retirement plans, or take money out in a year when you have low income tax, and someone that's sort of thinking about your taxes from a proactive standpoint might be able to point that out. I will tell you that.
So,
Oh, go ahead.
well, I was just gonna say, I mean, like, I think that's really interesting. It's like you don't know what you don't know, and the softwares that are out there, they're great. They've come so far, right?
Yeah.
I mean, in terms of what they can help you kind of discover about your situation. But I think at the end of the day, I mean, working with someone that has kind of that deep body of knowledge, you don't know what you don't know. But if you're working with someone, then I mean, kind of who are you looking to, in terms of expertise, what kind of credentials are out there to kind of demonstrate that commitment to knowing what you should know.
Yeah. And I can tell you, even on simple returns, you run into situations that you have to go research on a regular basis, and because the laws change and so much, and so you're not quite sure if it applies to you. The instructions in the software, they're really good, but you're like, hey, is that me? Is that not me? Or how do I enter this exactly in the form so it's taxable or not taxable? There's a lot of different things you got to be aware of, and sometimes these simple tax returns can be the most complicated ones. So, oh, hey, do my return. It's really simple. And it's like 5 hours later, you're like, oh my God. So,
So, like, I mean, in terms of those, credentials, the CPA, I mean, that's your CPA, that kind of, I think, is probably at the top of the kind of level of expertise when it comes to tax. What else is out there? I mean, if someone's looking to, work with a professional to help them with their tax situation, what other kind of professional, credentials or designations, kind of demonstrate that, body of knowledge, commitment to the body of knowledge?
yeah. So the other one I'm just really aware of, there's the enrolled agent, which is
Mhm.
sort of like a CPA, but it's very specifically designed towards getting tax education, tax specific education. The CPA education, there's a lot involved in it. Only one portion is tax related. You have audit, you have law, you have just general accounting. So it's a broader sort of to look at your knowledge as opposed to just taxes. The other thing is these big companies that like a HR Block or a TurboTax or something like that. What they do is they have regular certified people, but they give them a lot of very specific training, on the
Mhm.
tax law. So I know that, people that go to work for those companies, they have to take a course related to the income taxes that they're preparing. And it's a really detailed course. So they have to gain that knowledge. So I think those people can do the tax returns. You don't necessarily have to have a CPA or an enrolled agent. You do need somebody that prepares the type of tax return you're getting prepared on a regular basis, so they know the ins and outs.
Well, let's talk for a minute. I think it's probably a good segue, and maybe the last thing we'll have time to talk about. But like, what happens after the fact? Okay, you send in your return, whether you're doing it yourself or working with a professional. It goes out there into the ether, into the IRS system, and then they review it. What if something goes wrong? Like, what does that look like for a taxpayer? And is it different? Do you have kind of different support if you're working with a professional versus kind of doing it yourself? Like you have somebody on your side, so to speak. But like, what can go wrong? And like, I think one question I did also want to ask: how many years of tax returns do we need to hold on to?
So that was pretty easy. That was 3. I think the IRS can go back 3
Okay.
years. For some reason, people like keeping tax returns, but so 3 years is the sort of the main date there. So what happens after you file your tax return? That can actually be really scary, and I've received some really panicked calls over time, because what happens is if something goes wrong with your return, or the IRS receives information from somebody and it's not on your return, they will send you a letter, and they will calculate interest, and they will calculate penalties, and they will say, hey, you owe us this amount of money. And that can be really, really scary. I mean, I've gotten calls from people that owe hundreds of thousands of dollars because, they sold a house that was their primary residence,
Mhm.
that's not taxable.
Mhm.
And they didn't know that they received or it was reported to the IRS, and there's not a gain anyway, it's not really a taxable event, but the IRS will say, hey, we received this notice saying you sold a house for $1 million and you owe us tax for that.
Mhm.
And so that happened last year, and the tax was really zero. There was no tax implication
Yeah.
on the transaction, but it was zero. So you can get that. The IRS can also go the other way. They can, or a state can come back and say, hey, you told us you paid in this amount in estimates. You actually paid more, or you forgot to tell us. They'll actually proactively send you a refund if they calculate the information
Mm.
and they determine there's a refund. They will send it to you, and that's happened also. So I get calls like, "Hey, why did I get this?"
That's a bit nicer to get in the mail than the letter that says you owe, 6 figures worth of taxes.
Yeah, some people cash those checks right away, and some people are like, "Whoa, I'm not cashing this check. I don't want to get in trouble." So it's interesting.
So like, how does it work? Like what happens if you're getting audited? Do you get a letter that says, we're going to audit you, and well, if you're a taxpayer, what do you do if you get that notification?
Yeah, that's a really good question. A lot of the audits in the last that I've seen are sort of by mail audits. The IRS was sending out letters requesting for information for the returns. You had to gather that information and support and send it in. But yeah, you need to be able to provide support for your income or deductions if you get that notice that you're going to be audited, and that can happen. And really that gets a little, I don't want to say scary, but gets a little bit more difficult if you own a small business, or you put something on your tax return where there's like a really high charitable deduction for goods that you valued yourself. Like you have to prove to the IRS that you gave those, the receipts, through documentation, through lists, very specific lists of items. And, like even like one that could run people into trouble is like tracking mileage to get a tax deduction for a small business, for your car. You need to say, hey, I went X place and it was this amount of mileage, and then there's this calculation. So the IRS will request that documentation. You may have done all that, but if you don't have the documentation or the support, which may just be like a handwritten, like here's the dates, here's where I went, that could get could get an audit. You could owe tax.
Okay. So if you're, especially, it sounds like kind of in the world of, you have a small business, then, I imagine if you're working with a CPA or a tax professional, they can kind of help you out in the event that you are getting audited, to kind of probably, maybe they have all that information for you, or they can kind of help navigate through that.
Yes, that is correct.
Well, we've covered a lot. I think we've really been talking about just filing in general. So we talked about deadlines, talked about how to prepare for filing, kind of income withholdings and payments and so forth. Running out of time, but the last thing I wanted to ask you about is in terms of fraudulent tax returns. I know this has kind of become more and more common over the years. Anything, taxpayers should be aware of in terms of, if they get a notification that says a tax return has been filed in your name, or if they go to file their return and discover, a tax return's already been filed for that year. What do you do in that kind of situation where, someone's filed maybe a return on your Social Security number?
Yeah. So I got to be honest, I'm not very specific on the procedures, but I know that you can get a specific filing ID, so a 6-digit code the IRS will send you each year that you put on your tax return to verify it's you, and it's only received by you. So we have a couple people that in the past have had their tax returns fraudulently filed for them. And so what they do is they receive this 6-digit code in the mail, and we put it on their tax return. It verifies. The IRS also now asks for, driver's license information to verify your identity when you file those tax returns. So they're trying to fight against it, but it's hard.
Yeah. I know it can cause a bit of a headache. And then, so you do kind of get that 6-digit code that you can use to kind of protect your identity, if that's happened to you in the past. My very last question, because we're out of time. Do you usually take a vacation in April or May after tax season, or do all CPAs take a vacation in after April 15th?
Back in the day, I used to go on like a 3 or 4 day golf trip and just let loose back in the day. So it's not as crazy for me as much anymore, and I'm able to handle it. But in the past, yeah, you pretty much take some time off. I mean, at minimum, you take the next day off. So April 16th, it's crickets in the office. And then,
Yeah.
some people will go away, go on vacations, and just shut down and wait for the next deadline to arise.
Yeah. So don't call your CPA the day after
No,
your
you're
tax.
not getting a return phone call.
Yeah. Well, that's it from me. I think we covered a lot of good ground on tax filing and so forth for this week.
Yeah, thanks, Jake. That was fairly painless. Hopefully, that was good information.
Yeah, no, I think it was, and yeah, we'll look forward to getting together next week.
All right, we'll see you soon.